We have the mechanisms of corporate governance. What are the structures? So basically, mechanisms are the structures that are normally put in place to ensure that corporate governance actually is adhered to. All right. And there are two legs or dimensions. We have the internal mechanisms and we have the external mechanisms. So internally, corporate governance can be achieved through ownership structure. All right. So one way to ensure that these companies are actually properly governed is through the ownership structure. And I think somebody asked the question, or was it a suggestion where he made a point that most of the time the CEOs also tend to be people that have invested a lot of money. But it was in the context of such CEOs actually then appointing people that they like as directors or board members and so on and so forth, board of directors. Okay. But in this context, the idea is the same. But the logic is that if you have people that have shares or interest in the company, then there is the higher tendency that they will make decisions that will be in favor or that will be right for the company because they have their interests at stake. Okay. So one way to ensure that companies are properly governed is that when it comes to the ownership structure and their representation on boards, you actually have to get people that have high interest in the company in terms of their investment to be part of the boards of the company. And the assumption is that because they have invested a lot of money in the company, they will not sit down to allow the management of the company to dissipate their resources, all right, on unnecessary expenditure. Okay. So there is normally some percentage of shareholdings, depending upon the company policy, that if you have, for example, you automatically qualify to be on the board of the company based on the principle of ownership structure that the company is having. Just to ensure that because you have a lot of investment in that company, all things being equal, you will not allow management to take any decisions that will waste your investment in that particular company. Okay, so the ownership structure of the company can be one of the mechanisms through which you ensure that the company is properly governed. Okay, the next obvious one that we've been talking since all this morning is the board of directors, and I think I've explained it well. Okay, so the boards are there to represent the shareholders. That is the general idea. All right. And they are supposed to be acting in the best interest of the shareholders. So they shouldn't sit there and simply watch management of the company do anything at all in terms of wasting the resources of the company. So boards of directors are also some internal structures that are put in place to ensure that companies are properly being governed. And the last one is executive compensation. This also discussed it earlier. All right. So the issue about executive compensation is the fact that you don't just pay bonuses as if it's a ritual. Okay. But to link the payment of remunerations and bonuses and awards and rewards to the performance of the company. So that if the company, whatever, to the performance of directors and the management of the company. So that if they are not performing well, they don't also get to get a lot of pay or compensation as a result of poor performance. So you can also use executive compensation as a tool. The logic is that because directors want to be paid well, because board of directors may also want bonuses or some extra reward or to be paid well, all things being equal, they will make right decisions to make sure that the company performs very well. All right. So these three are the internal mechanisms or structures that can be put in place to ensure that companies are properly governed or companies adhere to the principles of corporate governance. Okay. Gilbert.
Yeah. Hello, bro.
Yes.
Please, I'm aware the boards are not paid salaries.
Yeah.
I want to know why is that so?
You don't know why they are not paying salaries?
No, please.
Okay, so let me give you an idea. What they are paid is not actually called salary, but it doesn't mean it's not something substantial. It depends on the size of the company in a way and the type of company. Okay. ETI, the group company of EcoBank, the whole of Africa, the group. All right. I checked, was it last year or this year? The annual bonus that they give is about, is it $100,000? I've forgotten.
Wow.
Yes, the sitting allowance is, and that doesn't include sitting allowance and stuff like that. Okay, so they are not called salaries. Of course, salaries connotes the idea that you come to office every day, you have an office at the workplace. So it's also a technical thing under labor law, all right, to be a salaried worker. There are certain things, and board of directors don't fall under that category. You don't come to work every day. They only have meetings either half yearly or quarterly to discuss the affairs of the company and so on and so forth. But the compensation and what they take, the bonuses, how are they even got? Honorarium, yes, honorarium.
Yes, honorarium.
So, yes,
or allowance.
Or allowance. It's not easy, but as I said, it's not the same as any other company. All right. I hear Bank of Ghana is $8,000. Is it monthly or something? But they won't call it salary. No, don't scream. Don't scream. I'm not too sure about that. You can go and check.
Well, even if you are not sure, okay? Even if it is
that is a lot of money.
And see Bank of Ghana now.
Hey, so therefore,
but it comes with a lot of work also.
Beautiful. That was where I was coming.
Prof was saying that you should have at least had this experience, corporate governance, and you are saying that how many of them have corporate governance experience? They are just the political appointments. Some are just there because
no, you don't, Mami Sawa, you don't know, so don't just go that way.
What I don't know, that's the thing. Prof said,
I mean, you know, Rami is a representative of the government in this class.
No.
Yazid Adam. Oh, I know you. I know you.
That's a class.
I'm not a representative of the
government. Whenever you tie the government small, Adam will come in. Hey, how much are you paid?
I don't think we're talking about this government in particular, but
exactly.
Bank of Ghana as an institution.
Exactly.
Sure.
Yeah. Augustine, I can see you on.
Prof, my question is a follow-up as to the losses that have been recorded at the Bank of Ghana, looking at the structure. Who are the people to be held responsible? Is it the government, the board of directors together with management? Is it the government? Who should be held responsible?
So I just told you that when it comes to losses, generally in the governance of institutions, you should expect them. So the only time you can be talking about who can be held liable is when there are clear breaches of the law. Okay, if nobody has done anything untoward, it is to be expected that in the ordinary course of businesses, some losses will be made along the line. Okay, what I know about this Bank of Ghana thing is some laws of the their own banking acts, where they were supposed to go and seek parliamentary approval or something of that sort.
They exceeded their threshold. Yes, they exceeded their threshold.
Yes, if you exceed that, you need the approval of parliament and stuff like that. That is why the minority is holding on to. Okay. And once it's part of the law and the governor didn't obey that, then it becomes an issue of poor governance. All right.
Okay.
So until there is a clear breach of some provisions, some laws, it's expected that even as human beings, you fall sick, isn't it? When you fall sick, who do you hold liable for? So there are instances of losses and all that. The only time we'll have a cause complaint is when there is a deliberate breaches of some provisions of law, some fraudulent acts, and some negligent decisions and stuff like that. All right. So until I don't know how the minority want to push it, whether they just want to use the demonstration angle or they want to test it in law. If they were to test it in law, then I think we'll have a case at hand, okay, where the Banking Act says to do this, you need to do that. Whatever. In some instances, they needed the approval of the finance minister. Under some circumstances, they need not just the finance minister's approval, but they need the approval of parliament as well. Okay, so those issues are the only steps. So assuming even if Bank of Ghana had not made losses and those provisions were not obeyed, the consequences would be the same as the Bank of Ghana making losses. All right.
Okay.
But most of the time, people get interested in these breaches because of the losses. But the real thing is not really about the loss. It's about the fact that some provisions have not been respected or obeyed.
So, Prof, when you look at the let me say the allowances or whatever that is being given to the board of directors of Bank of Ghana, do you see it as part of the reasons why they are running the huge losses that they've recorded over the years?
No, I don't want to be company specific, right? I don't know much. I'm an outsider, so I won't be able to tell. I don't know the enormity of
the figures that have been floated out.
No. It's not really. You see, you need to assess the risks involved. It's like me here complaining about how Messi is being paid or Ciro is being paid, right?
Okay.
Yes, it's different in altogether. What's the risks? When he started his football career, he could have got some injury, and that would have been the end of his career, right? But I can be here envious of how much he's being paid. So alongside until I get a full view of their duties and responsibilities, and also the risks that comes with this assignment, it will be wrong to pass judgment on the reward systems that have been paid.
Are they not public?
No, what I'm saying is that I don't know details, so I can't pass judgment.
All right, Prof. I understand your angle. I won't go further again.
Prof, bear it in mind that Augustine is a constituency secretary of a party, so if he's pushing
you people, you want to use this platform.
My questions has no links with political colorization. Is it because you are known already?
You guys, I'm a poor teacher somewhere.
Prof, if he's pushing you. Resist the temptation.
Yes,
that's why I said I won't push Prof again. I'm okay. I won't push him again.
But Yazid, when I have to say it, I'll say it.
Of course. Yes. Of course. Oh, but Prof, for instance, the main thing the opposition has been complaining about is about the inability of Bank of Ghana or the refusal of Bank of Ghana to go to Parliament for approval to spend beyond 5% of the preceding year's revenue, tax revenue.
That's right.
Exactly.
So
that's right.
It's not really about any person or any government. It can be any government in power, and if these violations happen,
that's right. That's right. So that's the point. That's the point I want us to stay with. Okay. Whether the Bank of Ghana made even profit or loss is irrelevant. Okay, the key thing is whether some provisions of the Banking Act were breached. That's the key thing. All right. But the issue, as I said earlier, if there were no losses, probably people wouldn't have known about it and gone back to check the Banking Act and these provisions and so on and so forth. Okay. Right. Yes. So let's stay in the context of corporate governance, not but it's politics is a part of us anyway. We can't just it's part. So let's move on. So have we understood the internal structure? So you can use the ownership structure to ensure proper governance. You can use board of directors. You can also use executive compensation to ensure proper or good corporate governance. All right. So the external mechanisms are rules and regulations already under the broader umbrella of laws. So we've touched on this over and over again. So we have things like the company's code. Sometimes even the constitution of the country can come in. All rules, if you come to the industry within which you're operating, all the laws that you have to obey and so on and so forth are supposed to ensure that the company is properly governed. Okay, so adherence to rules and regulations basically is to ensure that there will be proper corporate governance standards. If you pick accounting, you don't just prepare your accounts anyhow, how you feel it. There are accounting standards that have to be obeyed and respected. Okay. For example, if these standards were not there, companies may intentionally want to declare losses through provision of bad debts and whatever, bad and doubtful debts, or even through the provision of depreciation, for example, because these are normally things that the company have to decide the percentage they want to give for, say, provision for the bad debts and provision for depreciation. All right. To avoid this, there are international accounting standards for how such transactions should be treated and so on and so forth. And there are several other gray areas that companies could have used to do some dubious transactions. Okay. So respecting accounting standards, operating according to these standards are all to ensure that companies are properly being governed. All right. And then we have competitive markets. So all the markets that the major categorization that we can think about. Earlier, we touched on the capital markets, that investors, before they want to invest with you, will look at your corporate governance, how well you following the tenets of corporate governance. We spoke about customers. Customers, before they buy from you, want to ensure how well the company is governed. And how well it is governed will also reflect in the quality of the products and services that you sell to customers. All right. If we go to the finance or debt market, yes, it's a major point on its own even. Part of this investment in bankers, lenders, and all that, before they give you their money, we want to ensure that you can pay back. And that all of this will ensure that your company is properly be managed. In fact, we have what is even known as the CEO markets. Okay, where if you're a CEO, you need to be mindful that you have competitors somewhere on that market. If you are not performing well, you can be fired, and another CEO will be hired to come and take over the company. So all the competitive markets, your own competitors will put pressure on you to ensure that the company is properly governed or managed. All right. Then we have societal and cultural values. So Blessling, is it Blessling who was asking about ethics?
Yes, please.
Good. So under the external mechanisms, wherever you are operating, the societal and cultural values, which is basically the ethics and the values, the norms of the society within which you're operating, also puts pressure on you as to how the company should be governed. Okay? What you can do in some societies will not be the same in other societies. All right? If you are into the extractive industry, maybe if you come to Ghana and other developing countries, you can easily get away with, say, polluting of water bodies, deforestation, and some other bad activities like that. But in other geographical areas or in other continents, you dare not actually undertake that particular activity. Okay, so how well you operate could be linked to the societal and cultural values where you find yourself. Things like child abuse and so on and so forth, labor, employee rights, all of that will be linked to the societal and cultural norms or values of where you are operating. Then debt financing can be a major way to ensure that companies are properly governed. Okay, so principally operations are financed through two types of funding. They can either go for equity or debts. Equity is where you have owners of the company or would be owners of the company actually giving the company money to undertake the activities, or the company itself having money to undertake its activities. Okay. So by law, for example, companies are not required to pay dividends every year. They have to go, the board will have to make that decision, come to AGM and to get the approval whether to pay dividends or not. If they don't pay dividends, you can't send them to court because there is no guarantee that, or it is not a requirement that every year companies have to pay dividends. Okay, so not literally they have access to the monies of shareholders for free, so to speak. All right, and they can choose to reinvest it in a way they want and so on and so forth. So from the equity angle, there is no much pressure on companies to ensure that companies are properly governed, because whether they make a loss or they don't pay you dividends, you cannot take them to court for that. But the other angle of financing, which is debt, okay, comes with different rules and regulations. When it comes to the payment of interest, you have a contractual obligation to honor that. Okay, so you cannot, unlike payment of dividends or equity where you can choose to pay or not, when it comes to loans, the paying back of the loan and the interest on the loans, management doesn't have choice. Okay, they have to pay that. And from that angle, we then can argue that debt financing has higher tendency of putting pressure on management to ensure that companies are properly governed compared with equity financing. Okay, so if you go for loan, because of the pressure on you to pay back the loan and the interest that may accrue on the loan, all things being equal, there will be more pressure on you to manage your business very well in order to fulfill those obligations. Mami Sewa, your hand is up. Yeah.
Well, what if the company has declared dividends and still doesn't want to pay dividends to shareholders?
Hey,
What happens?
Once
or
you declare,
we are still looking at it from that angle.
No, once you declare dividends, what it means is that you are obligated to pay.
Yes.
But the point I said is that companies are not obligated to declare dividends. Yes. So there could be years the company has made profit, but may decide that they want to reinvest the money to expand the company.
Okay.
And so may decide, or if you were here, I was explaining some of the contentions that may come up between institutional or majority shareholders and minority shareholders.
No, I wasn't here from the onset.
So yes, so most of the time, minority shareholders may be interested in payment of dividends, right? Because they need the money for everyday expenditure. But institutional shareholders are normally more interested in the growth of the company or growth of the share price of the company. So they won't really mind if the company decides to invest back the profit that they have made. And that is normally one of the typical contentions that come up between institutional investors and individual investors.
But please, do they tell the shareholders that they want to reinvest it?
Yes. So during annual general meetings, they will present their accounts and tell the shareholders that given the opportunities that they have seen in the industry, they think the company will be better off investing the profits. Okay. And even during periods or years that dividends are declared, most of the time they don't pay everything as dividends. Companies have what is known as dividend policy that decides the percentage of the profit that should be paid out as dividends. Okay. But the point I want to establish is not from that angle. I just use that to explain the debt financing. What you should be paying attention to is that when it comes to debt financing, companies have an obligation. It's not an option like equity financing. Okay. When it's debt, by law and the contract you've entered into, you are supposed to pay back the loan plus any accrued interest. And so they don't have the leeway to do that. And the argument is that then has the tendency to force this management to ensure that their company are properly governed. Because at the end of the day, you have to pay back your loan with interest. Okay, so that is the focus of this debt financing, and I'll appreciate it if you grasp it from that perspective. Idrisu.
Yeah, Prof, with the debt financing,
yeah.
In fact, I have so much interest in it. I want to find out, is the sorry, is the banks also the process that you go through, the rigorous assessment by the financial institutions before they grant the loan? Is that one not also another means that the company will want to conform by doing the right thing?
Or is it to be able to get loans?
Yeah, to be able to get loan. You know, the banks will have to go through some rigorous.
Is it the bank or you, the person who wants the loan?
Not the bank. I'm referring to the bank.
Idris, I'm confused. So, are you asking for the procedures that people who want loan will have to go through, or what the bank must go through? Then you come again. Come again. Mm-hmm.
All right. So, Prof, the assessment I'm giving, that like from your explanation.
Yeah.
The first one, perfect. Because you have to pay back the loan. You are required to work hard or to make sure that you are able to pay the loan. If not, the bank might come for your company.
That's right.
So that is the aspect. And the second aspect I'm trying to bring in is because you have to meet certain requirements before you access the loan from the bank. Would that not also improve your transparency of your operation?
That's right. That's right. So it's not from the bank's perspective. It's from the business who wants the loan from the bank, isn't it?
Yes.
You, the business owner or the person who wants the loan, you have to make sure that you meet the requirements of the bank. Is that not the case?
Yes, Prof. That's where I'm coming from.
Good.
Because we are looking at there was some time we were trying to look at the SMEs sustainability. And we were saying that maybe if they are also able to have a combination of both debt and equity, that might help them more. That might help them to be more sustainable. Because we realize that most SMEs, after between first 1 to 5 years, are gone.
That's right.
But if they bring in the debt aspect, because of the bank's requirement and how the banks will assess them before they give them the loan, it might also be able to improve upon their sustainability.
That's right. That's right. But yeah, it's true. But then that same explanation can feature in two places, right? It can fall within rules and regulations, okay? And it can also fall under debt finance. So I agree with you. Yes. So the standards, the rules that you have to follow in order to even get the loan itself. For example, one of the requirements is probably to present some 3-year financial statements. That alone is corporate governance requirement to make sure that you keep proper books of account and so on and so forth. Yeah, so I agree with you. But it could be used in explaining both rules and regulations and also for debt financing. So that's a perfect point. All right. By the way, where do you work? Is it an NGO?
No, I work with a public university, Prof. I did my research in the SME sustainability.
Oh, okay.
Yes, please.
Okay, that's fine. That's okay. Blessing, was it Blessing? I saw it. It's her.
Yeah, I wanted to come in to say that it would be a point for rules and regulation, as you earlier mentioned. So that's fine.
Okay, that's okay. Yes, so let's get to this other point. Yes, so I like the contributions this morning. It has made the discussion very nice. The discussion is very nice. Yeah. So companies have obligations. If you are a company, you have obligation to society. So you need to protect the national interest wherever that you find yourself and you are operating. You shouldn't do stuff that will abuse the interests of the nation. And what readily comes to mind is the payment of tax and how multinationals can use their other branch companies or companies in other jurisdictions to say evade tax. That is not good corporate governance. You have an obligation. Once you are in the country, it is in your best interest to ensure that the country also survives and thrives. Otherwise, where will you get the opportunity to be making those profits that you're seeking to avoid the payment of tax? Okay. So yes, national interest is one thing that you need to have at heart. Then companies should avoid or should embrace political non-alignment. All right. So yes, you need political links. We cannot, in reality, you need the links with politicians to be able to get some contracts and all that. But you shouldn't be overly political. Okay. Once you are a typical politician, and you are also a businessman, in our context, your business deals are questionable. What normally will be happening is that probably you'll be using your political affiliation to get some unfair advantages. Sometimes there are blatant abuse or disregard of the law because you are a politician. Right. If your party is in power, it works for you. But once they lose power, and then don't forget the opposition is also watching. Once they lose power, they will use the same rules and regulations, or they will also use their political power to destroy your businesses. Okay. So whilst you will need connections in the politics to be able to get contracts and so on and so forth, it is very, very important that you don't become overtly or obvious politician that everybody will know that this company is for this political party and so on and so forth, because it can cost your business. And we've seen it happen in this country. So avoid politics as much as you can. And that is one of the advocacy of good corporate governance. You don't want to become political, okay? Because that can create problem for you along the line. Then the advocacy of corporate governance, legal compliance, as we've seen already, rule of law, as we've seen already, honest and ethical conduct. Have you seen it, Blessling? Okay, so you keep on seeing ethics in various forms because it's part of good corporate governance. Being corporate citizenship or corporate citizen.
Question.
Yes, I've seen your hand. I'll come to you. Okay, being a good corporate citizen is one of the obligations that you have as a company, so that your interest will not just be profit. You should be interested in the community and how you can help them. Ethical behavior has come up again. Social concerns, accountability, timely responsiveness. These points we've explained already are all obligations that companies have to society. Mami Sewa.
Oh, I think it's fine because when I saw the obligation to society, I didn't know the person who owns that obligation to society. I just wanted the clarification.
Oh, okay.
I thought it was corporate governance to society.
So we're talking
earlier
about.
on, we said about the importance of corporate governance, and when we came here, you said obligation to society. So I was kind of confused. I didn't know who's that obligation.
Right.
But
So now, yes. So now we're talking about companies or corporations, right? Or generally business. If you're into business, you owe these obligations to society. Okay. Then you have these obligations to investors. You have to try and maximize shareholders' value. And shareholders' value simply means investors' value. The money that they have invested in the company, you have to try and maximize that. You have to promote transparency and informed shareholder participation. You have to ensure transparency. You have to keep proper financial reporting and records. I think all of these points we've explained already. When it comes to employees, you owe them these obligations as a company or business. Fair employment practices. Okay, Marisha.
Prof, please, can you go to the slides before this one. I just need some clarification. Promoting transparency and informed shareholder participation. How do you do that?
So transparency, we spoke about the fact that you need to prepare financial statements, have these financial statements audited, have this financial statement also publicized, isn't it? So that shareholders will actually know when they come for even AGM, they have something informed position because all the information about the company has been made known to them. Okay. If you don't provide them with adequate information with regards to how the company is being operated, they may come, but because they don't have information, which is the angle of transparency, they will not be able to speak from an informed position. Okay. Right. So obligations towards employees as a company, fair employment practices, equal opportunities. You need to provide all of them, equal opportunity. Encourage whistleblowing. Whistleblowing is an important aspect of corporate governance, where employees are empowered to be able to report the company to authorities, not just companies. Like if somebody is doing any fraudulent activity in the company, they should be encouraged to be able to report the person, all right? Humane treatment, encourage employee participation, employee empowerment, ensure equity and inclusiveness, and ensure that there is participative and collaborative environment. These are obligations that companies have towards employees. Mami Sewa.
Prof, please, you were talking about encourage whistleblowers. How is it different from grapevine?
Oh, grapevine is just rumors, isn't it?
MSA, rumor.
Yes, rumors. Yes, it's different from whistleblowing. Whistleblowing is where, for example, you have your boss in the company doing that which is not right. Okay, or if you even take the whole company, the company is probably evading tax. All right, okay. Then you report them to GRA. Recently, you know, they have been going around to close down some shops and all that. Yes.
Ethically.
Exactly, minded employee.
Yes. Okay? Yes, as ethically minded employee.
Yes. Okay. So if you were an employee in that company, you realize that they have not been paying. They have been taking VAT or whatever, but they have not been paying to GRA. You can find a way of calling officers there to make them aware.
So that's whistleblowing.
That's whistleblowing.
About grapevine is like grievance is not straight.
Grapevine, yeah,
it may not be true.
Exactly.
Rumors.
Yes. Okay. Yes.
Okay.
Okay. So part of good corporate governance, and Ghana, we have the Whistleblowing Act. It's part of. Have you guys got the book already? Have you had the Mami Sewa, have you gotten your book?
Not yet.
And you're asking so many questions, Mami Sewa.
Oh, Prof, I want to ask so that exams is
don't worry. I'm just making fun. Don't worry.
The book, I didn't give it to me. You didn't reduce it for me.
The rest of you, have you bought the book? There is something I just remember because there is Whistleblowing Acts.
Yes, as part in Ghana.
As part of the content of the book. So try and get that and start reading. Okay. Yes, so these are obligations that you have towards employees. Then you have these obligations towards your customers as a business or company. Make sure you provide them with quality products and services. Provide them with products at affordable prices. Then you should have an unwavering commitment towards customer satisfaction. All right. Make sure that you satisfy customers. Then if you're a manager in the company, you have these obligations towards the company. All right. So you have to protect the company assets. You should know how you behave towards government agencies. I just told you much earlier that you want to avoid politics as much as possible. But in the same vein, most of these agencies and ministries are where the contracts are likely to come in from. So you need to find balance in terms of how you relate with government agencies. All right. Not giving bribes, that will be against the law, but you need to establish good rapport also. How you do it is up to how tactical you are as a manager. Okay. You have to ensure that there is proper control, no wastage of resources in the company. You have to build consensus. Gifts and donations, you want to be mindful of that. Under ethics, we spoke about this as well. They have the tendency of weakening your judgments, right? So you want to be careful about gifts and donations, whether as a receiver or as a giver. And all of this actually is based on geographical locations, okay? If you get somewhere, once they get to know that you've been giving gifts and donations, it has the tendency of being classified as bribe and so on and so forth. So for some jurisdictions, they are not allowed at all. In some jurisdictions, you have to declare and probably pay tax on that and so on and so forth. So there are all manner of rules and regulations governing gifts and donations, whether you want to give or you want to receive them, okay? Then you need to know or be mindful of the role and responsibilities of board of directors. I think we've explained this extensively. So you need to know that the boards are supposed to provide directions for the company, but as a manager, you will be responsible for the day-to-day operations of the company. So you need to know that the extension, so that you don't allow directors, some of the directors, what they do is actually to come interfering with the role of a manager. And that is not also proper. So, and if you don't know, then probably they get away with it. So you need to know your role as a manager and the role that directors are supposed to be playing. In the same way, you don't conflict with the role of what directors, all right? I think a similar scenario played out, and the former Auditor General, what is his name? Domlevo, right? And the director of the board, yes, the board of something agency, audit agency or something of that sort. Recently, there was also some banter between the Minister of Energy and who is that? The chairperson?
GMPC.
Yes. What is his name?
Fred Blay.
Fred Blay, right? Yes. So it's important to know these distinctions as a manager, so that you can manage the company properly. If you know your rights and responsibilities, it will help you to be able to manage your company.